Hello, value investors. Thank you for joining me. My name is Michael from Deep Value Returns on Seeking Alpha. Today I want to discuss Amazon's recent result, Q2 21, and I also want to talk about its guidance. Then we're going to talk about what I believe is its crown jewel, which is advertising. And finally, we're going to bring this all together and talk about its valuation. So, here's the thing. So Amazon put out that its guidance for Q3 is going to be approximately 16% at the high end. And obviously for a company that has been growing during the pandemic at such a rapid rate, investors were inclined to believe, myself included, that trees would just grow to the sky. And this guidance took many, including myself, by surprise. Now, what I think that is quite insightful is that Amazon's CFO talked about, before the pandemic, Amazon was growing at approximately 22% compounded annual growth rate. And if you look at a 2-year stack, it's still in that range. So they're kind of saying that after the next 3 quarters out, so once we come to lapping around approximately Q2 2022, that Amazon will return then to growing at approximately 20% CAGR. They don't say this explicitly, it's not explicit guidance, but there's some allusion there. Now, just wanted to take a step back and talk about successful investment strategy. So, when it comes to investing, it's not good enough to have a non-consensus view. It's important to be non-consensus, but ultimately you need to be convicted enough that you can see the investment through, and you need to be correct in a timely fashion. So you need to be non-consensus and correct, and it needs to happen within a horizon of less than, let's say, 2 years, because it's not good enough to say, at some point in the future, in the long term, I'm going to work out this investment right. So a lot of investors are saying, I wanted to be invested in Amazon, but I have to hold out for another 2 or 3 quarters, so I'm kind of throwing in the towel. And buying when everyone else is in full spirits and full of excitement about Amazon, and then when the company puts out some lackluster guidance, investors are like, forget it. So that's never going to work out. So by my nature, the way I invest is, I like to buy when people are yawning about the company and people are really saying, they've lost their mojo, whatever. That's a good time to kind of get interested in a company. That's why I typically am predisposed to investing in high quality businesses, because, even if you buy those businesses when the outlooks suck, more often than not, you're really going to buy a company at a discount, and provided that it is a good company, then you ultimately reward it. So let's move on. So I think that many investors are not really paying enough attention to Amazon's advertising business. So just to add some numbers here. So everyone knows about Amazon Prime and how successful Prime is. So Prime brought in 8 billion of revenues last quarter. And Amazon doesn't disclose this correctly, but it does say within its other segment, which is primarily advertising, also 8 billion in revenue. So Prime and advertising both brought in 8 billion in revenues, but this is the graph that I wanted to put out there. So you can see here that Amazon's other segment was up 83% year over year. So you can see there's just such an aggressive acceleration coming out of Q2 2020 that the advertising business is just really, really resonating very strongly with merchants. So now, if you think about it, the reason why it's resonating so strongly is that if you're going to advertise on Amazon, you are essentially resonating, you're surfacing, your product is being discovered exactly where she is buying. When she's going on Amazon and she's doing her research into what kind of products they're inclined to buy, the consumer is getting that advertisement right at the time of purchase. This is a very highly targeted. You can't really get much more targeted advertising than that. It's really influencing the consumer at the correct time. So I think that this is something that is really not discussed enough in financial outlets. And if you think about it, we know from Alphabet and Facebook that advertising is just such a profitable business. It's just insane how the margins that these businesses get. So it's probably not a coincidence that as Amazon gains scale, that in its advertising business, that its operating margins continue to expand. So just to give you some context, Amazon's advertising business was, Amazon's operating margins were up 200 basis points up year over year to 6.8%. So it's not, I don't think it's a coincidence that Prime and AWS and advertising, all these services, as they gain scale, it's driving up that operating margin. So, I mean, it's difficult to say, right? But I think that it's not inconceivable that Amazon's operating margins could in time get to approximately 12 to 15%. I mean, right now the high for Amazon operating margins was approximately 8%. So this was obviously last quarter, but I think that it's not impossible that as these businesses grow and mature, and Amazon is able to take its foot off the pedal, that we can see some expansion beyond what I previously felt, which was 10% operating margin for Amazon. It might actually eke up closer to 15%. So Amazon right now is priced at approximately 4 times sales. So Amazon doesn't really come much below that, you know. It has in the past traded at approximately 4 times sales, but at least right now, you know that Amazon is a profitable machine. Whereas before, there was always the question mark whether Amazon would ever be a profitable enterprise. Right now, the growth might not be as strong, at least over the next 2 or 3 quarters, but at least you know that Amazon is a very profitable engine. So if you want to know what kind of stocks I'm looking at, so I am very much of a contrarian type investor, and I'm very much looking to buy when others are not wanting to buy. I put this line here, so I said you can either buy when others won't and sell when others want, or you can buy when the animal spirits are running high, and then you ultimately end up selling when everyone is selling, and you sell into bad news, which is not something that I ever recommend. So if you want to check out my marketplace and find out what stocks I'm interested, it's called Deep Value Returns on Seeking Alpha, and I'm not looking to displace you and your style investment. I'm just looking to offer you up 1 or 2 key ideas to say, oh, have you thought about this? Have you thought about that? Have you looked at this investment? Ultimately, you might not have the time and inclination to be looking out for specific stocks. So my marketplace is a place where you can have, where I show up some high growth names and some value names, and hopefully you'll find something in my hybrid portfolio that will help you in your investment journey. See you soon.